Gold is up 7.42% year to date, but it's consolidated right now after I shoot it up. It's very normal. This is called consolidation, pullback, or correction phase. But there are 5 assets skyrocketing 20 times. Why gold price dropped from its high? What are they? After watching the video until the end, you're gonna know what I have been trading. Welcome to World Traveling Millionaire Stock Investor and Option Trader channel. So, in any assets, gold, cryptocurrency, stocks, it's very normal. After it shoot up, it can pull back, it can consolidate, and sometimes it can even correct. So that's why you never want to own only one asset. I own different types of assets: gold, silver, stocks, cryptocurrency. But there's one asset that's outperformed gold year to date. That is AMD stock. AMD stock is up 50.85% year to date, right? So 50.85% means it's 6.85 times gold return. And AMD also consolidated before it shot up. So very normal. So look at this. The past year, AMD is up 246%. Here is a consolidation phase. This is a consolidation phase is the time that we can accumulate shares or options, right? Options. AMD option trade 337 after I traded. I sent out alert to my patrons. So these are what I and my patrons and students have been trading. So AMD 300 strike price January 21st, 2028. And I traded on December 18, 2025. It was only 40.5 at the time. So you multiply 100. One call options represents 100 shares. So 4,050. If you have 4,050, you could trade this AMD call option at the time. December 18. Look at December 18. December 18 is right around here. Right after AMD dipped, right? It dipped right here. So I caught the bottom of the dip at the time that I bought lead options. Why do I choose lead options? You're gonna know in a short while. If you want to learn more about stock investing, option trading, gold trading, subscribe to the channel. And I got over 249% gain. So basically, it's 3.5 times money on April 24th, right? It stay going up. AMD stay going up. You can use this call option if you want. This stays lots of time. So 141.25. So it means 14,000. I turn 4,000 to 14,000 within 4 months. Where can you find investment like that, right? Where can you find a return gain like that? No. And plus, I traded on February 24th. Remember, the first trade was on in December. Second trade, February 24, 2026. 320 strike price, December 15, 2028. Hey, oh, why is your experience day different, Master Rich? And also my strike price is different because I want to diversify, right? This is all called diversification. So at the time, it was only 6,100. And within 2 months, had 159, right? So 2.5 times, more than 2.5 times within 2 months. So 6,000 become 16,000. Pretty good, pretty good. So February, look at February at the time. February is also consolidated. You can see right here, right? I traded on February 24. February 24 is right around here. February 24. See, February 24 right here. After the dip, after I bought the first one, it went up. Right then after it dipped, but I knew that it's gonna be ripped, right? So I didn't say. Definitely didn't say. This is just a small up. I have a leap option. The thing about leap option is I don't need to worry about time decay so much. You know what? I have so much time. Just waited. I added more February 24. Hey, you know what? I made the right decision because I knew it. And hey, another call option, I bought it again, December 15, 2028, 200 strike price, 80.17, 8,000. So March 2nd, I bought it on March 2nd, then hey, 165% gain, 212, 8,000 becomes 20,000. Very good, right? Very good within 1.5 months. Or, or March 2nd, I added more on March 19th, right? This is called DCA. We can DCA, not only the stock, right? But also call options. Very, very important. Very, very important for DCA. Different strike price, diversification. More or less similar expiration date because these are the latest that I can get for the leap option. March 19, hey, within a month, 214%, 3 times. See, more than 3 times. Look at this, 165. 5,200 becomes 16,000. Very good. I added more on March 31st, 6,745, 250 strike price, and see, after that, 18,000, 18,000, 176% gain within 3 weeks. Within 3 weeks. That's very, very good within 3 weeks. So, why do I use this different strike price? Because I believe the AMD could reach 300. 250 is just to be safe. So if you compare, you see, different AMD call option, right here is 320. 320 is 6,138, but then 200 is lower strike price, it costs more, 8,000. Why? Because lower strike price is less riskier than higher strike price. The stock may not reach higher strike price, right? So that's why lower strike price costs more than higher strike price. Very normal, 320, 6,100. And this is 4,300, right? Because at the time I bought is different, so you cannot compare it. I bought it in December, right? So AMD was consolidated just before the rip, so that's how you make money in call option. It's more than 20 times if you calculate it right here. 249%, right? 249% divided by how much is the goal? Goal is 7.42. 7.42 right here. 33 times, more than 20 times, right? And the other things, this 159, hey, stay much better than gold, much better than gold. The highest returns is 33 times, right? Okay, so that's how you make money. Of course, this is not a financial advice. Not everybody's gonna get it. It's difficult. That's why this is very variable. And why am I courageous to risk so much? Because I knew it, right? I put 4,000 right here. I put another 6,000 right here, and here is 8,000, 6,000, 8,000 is 14,000. Then another one is 19,000 in the March alone. 19,000. Then plus 7,000 is 25,000. 25,000 alone in March. 25,000. But if you add some more, it's much more. If you add more, 4,000, it's around 30,000. 30,000 to 40,000. I put in call option because I knew that it's gonna go up. AMD has been doing pretty well. This is one of the chip stocks that did not move up a lot, so I knew that it's gonna go up. It's gonna go up. You see, it went up before, it was consolidating, and it dropped a little bit. After it jumped, usually it pulled back. That's one we really want to get in. That's one I usually like to get in, because I knew that AMD was an value. And after the jump, it's a sign. Then after that it dropped. Then that's when I ended my first trade. It jumped again. I pull back. Second time, right? That's when I added so many call options. Then after that it ripped. These are the very typical sign of great companies. I only invest in great companies that beat S&P 500. See, 350, 70% easily beat S&P 500. So that's how I make money. If you want to learn more, go to Master Risk Stock Option Cradle, go to playlist, you can check out my videos. If you want to reach out to me on my mentorship call, my trade alerts, the links are in the description comment below. Comment any question if you have. I'm gonna be answering great questions. Share, subscribe. I will see you in the next video. Bye bye.